What's up, everybody? This is Sunko, the Korean bro. Today is 2022, November 6th. Um, it's been 4 days since I did a YouTube last time, and we had FOMC interest rate news this Thursday, and ever since then, um, we have a downward trend. Uh, we'll see how it goes, and we have another interest rate news this December, so we'll have to wait um, till it comes out. It's not the end. Next year we'll have a recession ongoing. Uh, at this point, we never know how long it would uh, last, but what we know is that we have to be cautious in terms of investing. So anyway, we have mm, on November 10th, we have a lot of events coming. Initial jobless claims, CPI, core CPI, crude oil inventories on November 9th. So we'll see. Mm. Uh, let's look at news first. Mm. Two FANG stocks to buy like there's no tomorrow. Here's what small cap stocks can do for your portfolio. Top 3 e-commerce stocks to buy in November. Royal Caribbean returns to profitability. Is now time to buy. 3 top stocks to buy now once in a decade opportunity. This indicator has been spot on calling bear market since 1870. Here's where it says would bottom. 2 FANG stocks to buy like there's no tomorrow. Nasdaq bear market 5 all inspiring growth stocks you'll regret not buying on the deep. 3 dirt cheap dividend stocks to buy in November and hold for decades. The only 2 index funds in Warren Buffett's portfolio and how they could make you money. Two beaten down stocks, cybersecurity growth stocks worth buying hand over fist. Three stocks that Warren Buffett, Kathy Wood, and Wall Street all like right now. 3 top stocks to buy now and once in a decade opportunity. This beaten down growth stocks growing like wildfire. Down 24 to 45%. 2 dividend stocks worth buying right now. How Democrats and Republicans want to change Social Security explained in plain English. There's a lot of issues about Social Security. I feel like I have to read at least one article about it so that I can take action regarding this news. There's gotta be news related to this article. So first and foremost, let's look at this article first. 2 FANG stocks to buy like there's no tomorrow. Big tech stocks are among the biggest losers in the market sell-off. Rising interest rates are weighing on the economy and cooling off demand. Some FANG stocks are cheaper than they've been in several years. And we have Amazon. So macroeconomic condition is really important. Although it's got a lot of potential, Amazon, the company, the price level is 90. Its all-time high was 172. So we'll have to wait and see. But like what we know is that this is like once in a decade lifetime, once in a decade lifetime opportunity. That's for sure. Let's read this. FANG stocks ruled the market for a decade. The group, they include Meta Platform, Amazon, Apple, Netflix, and Alphabet, delivered monster returns for years, but most of these stocks have crumbled over the last year. Four of the five are down by more than 40% from their peaks last year. Rising interest rates, recession fears, and other macro headwinds have pressured these stocks, bringing the most popular bet on Wall Street to an end. However, in default loud, there's an opportunity, and two FANG stocks look primed to reward investors over the coming years. Number one, Amazon. Amazon stock is down nearly 50% from its high a year ago, and its third quarter earnings report shows why the mighty e-commerce giant has fallen. The company stunned investors by guiding for revenue growth of just 2% to 8% in the fourth quarter, forecasting its lowest top line increase ever in the holiday period. The stock fell 7% on the news and has continued to slide since then. Okay. However, it's a mistake to think Amazon's growth is permanently stalled. Like many of its peers, the company cited macro headwinds for the weakness, but performance is likely to improve in 2023. First, the company's most profitable businesses like Amazon Web Services, its cloud infrastructure business, and advertising continue to grow at brisk rates. AWS revenue jumped 27% in quarter third to $20.5 billion, with an operating margin of 26%. In other words, AWS revenue run rate has reached $80 billion, with operating income above $20 billion. Advertising revenue, meanwhile, jumped 25% to $9.5 billion, or approaching a run rate of $40 billion. Amazon doesn't break out profits in advertising, but it's fair to assure that margins are likely in the 30% range, as they are at Google and Facebook. So let's look at Alphabet. Okay. So overall, we have macroeconomic headwinds. So because of that, not only big companies but our small companies all have downward trend. Here's what small cap stocks can do for your portfolio. Small cap stocks can be more volatile than shares of larger companies, but they also have a history of outperforming the broad market. Small cap stocks are commonly defined as companies with a market capitalization between $300 million and $2 billion. There are many different categories stocks can fall under, but one of the most common ways to classify them is by size. In this vein, there are three more main categories: small cap, mid cap, large cap. Small cap stocks are those with a market cap between $300 million and $2 billion. Mid cap stocks range from $2 billion to $10 billion. Large cap stocks are those above $10 billion. Everyone has their own investing strategy, and there is no requirement to buy small cap stocks. However, all but the most conservative and risk averse investors could benefit from dedicating at least a small percentage of their portfolios to these stocks. Three top stocks to buy now in a once in a decade opportunity. Qualcomm stock is dirt cheap as the market focuses on the soft near term outlook. Qualcomm. Okay. Roku has been absolutely punished, all the while continuing its advance in the media streaming industry. Roku. Okay. Amazon's profits are down this year, led by the company's investment in infrastructure, but eventually this will pay off and even more profits later on. There's no doubt about it. The bear market of 2022 has been painful, even confounding. Lots of high quality businesses that are still growing and highly profitable have been pushed out on the curb. Like their last night's trash. The Federal Reserve's aggressive interest rate hikes in an attempt to fight inflation, perhaps at the short term expense of the global economy's health, is where all the eyeballs are focused right now. Nevertheless, quality businesses are built to withstand this kind of pain and will emerge even stronger once the storm clouds clear. Dreamful.com contributors think Qualcomm's, Roku's, and Amazon stock crashes this year are once in a decade of buying opportunities. Here's why. It's not often one gets to buy a white mode stock like Qualcomm for under 10 times earnings. Uh, but investors have the opportunity today, even in difficult times over the past decade. Qualcomm's price to earnings ratio has typically bottomed at 15. So even reversion to that would yield 50% upside. The next couple of quarters will be tumultuous. Its fiscal fourth quarter report released Wednesday, Qualcomm bit revenue expectations, but guided for a sequential decline in revenue and earnings per share. Weak smartphone demand and high inventories sellers are causing an abrupt downturn in Qualcomm's handset chip sales, which is its largest segment. However, Qualcomm has a very high margin core business, which should still generate cash flow in good times and bad. As the owner of key wireless patents, Qualcomm collects royalties on every handset sold. That division has sky high operating margins of 73% and brought in $4.6 billion in income over the last fiscal year. Even Qualcomm semiconductor chip segment has high margins of 34% in the past fiscal year, bringing in nearly $13 billion. Even if there is a cyclical correction in handsets the next year, it's not as if 5G phone growth is over. In time, the market will return to growth once the economy recovers and inventories are cleared. But what's interesting about Qualcomm is that management, under CEO Chris Niato or Renu Amon, is cultivating other high growth segments in automotive connectivity and the Internet of Things for both consumer and industrial applications. The IoT segment was really impressive over the past year, growing 37% and making up 18% of chip sales. Automotive revenue soared 41% to $1.4 billion, while automotive chips only made up about 3.6% of the chip revenue in fiscal 2022. Eamon noted on a recent conference call the Qualcomm's automotive design win pipeline was $30 billion. Let's look at Roku. Roku media streaming technology expert Roku reported three quarters results on Wednesday. The modest third quarter guidance targets given in July turned out to be overly conservative, and the company crushed Wall Street guidance-based estimates. Adjusted net losses per share were 31% smaller than expected. Net revenue came in 10% above the consensus analyst view. Over the last 4 years, the Roku's active user accounts have swelled from 23.8 million to 65.4 million, Average annual revenue per user nearly tripled from a 17 to 44. Together, the trends of surging user counts and rising revenue per user drove total revenue 339% higher over this period. And Roku is achieving these results amid a period of economic crisis with massive inflation and tight consumer budget. These challenges will eventually pass, letting Roku return to the stronger growth trends of years past. Roku CEO Anthony Wood said as much on the earnings call. The market slowdown is definitely temporary, Wood said. The economy doesn't even have to turn around. What needs to happen is there has to be more certainty in people's minds about where the economy is heading. And it will cause people to come back in the market and start spending again. Okay. Hmm. Two beaten down cybersecurity growth stocks worth buying hand over fist. Datadog and CrowdStrike. Growth stocks have taken a beating in 2022 and could continue to fall. Many don't generate positive cash flow and show trades for very rich valuations, but Datadog and CrowdStrike are two leading cybersecurity stocks investors shouldn't ignore. In this video, Motley Fool contributors Jeff Santoro and Jason Hall break down what makes them attractive enough to buy hand over fist right now. Datadog and CrowdStrike Holdings. Many have soured Amazon, but Buffett, Wood, and Wall Street analysts appear to be optimistic about the stock. Although the enthusiasm of a BYD has waned somewhat, it's still a key holding for Berkshire Hathaway and one of Wood's ETFs. Buffett, Wood, and Wall Street just might have found a diamond in the rough with GM. Let's read about Amazon. Everyone's certain about its upward trend. It's just that it's been really expensive, but because of macroeconomic headwinds, it's gone down to the price level where I feel like I can buy. So Berkshire Hathaway opened a position in Amazon in 2019. Granted, it was other investment managers doing the buying rather than Buffett himself. However, Buffett clearly likes Amazon, referring to himself as an idiot for not buying the stock sooner. Wow. He even referred to himself as an idiot. Wood seems to be a budding admirer of Amazon as well. The stock ranks number 15 among the holdings of her ARK Space Exploration Innovation ETF, and Wall Street still loves Amazon. 43 of the 37 analysts surveyed by Refinitiv think the stock is either a buy or a strong buy. However, many other investors appear to have soured on the e-commerce and cloud giant. Amazon shares have plunged more than 40% year to date, with the accomplished weak fourth quarter guidance especially causing concerns. Okay. Let's look at about SoFi Technologies too. Then we got CrowdStrike Holdings, Datadog. And what else we have? SoFi Technologies. Okay. Online banking financial service provider Asafi Technologies just reported another very strong quarter with big growth in revenue, customers, and use of its offerings. But the stock keeps falling. In this video, Motley Fool contributor Jason Hall and Jeff Central review the latest quarter and make the case for SoFi as a misunderstood growth stock that's becoming significantly undervalued. How Democrats and Republicans want to change Social Security explained in plain English. America's top retirement program is staring down a greater than $20 trillion cash shortfall through 2096. Top retirement program is staring down a greater than $20 trillion cash shortfall. Lawmakers from both parties have offered the proposals to strengthen Social Security. Ideological differences on Capitol Hill make it unlikely that Social Security change will be enacted anytime soon. So what we can see is that it's clear that Democrats and Republicans they're both trying to fix Social Security system. So for most retired, Social Security represents an indispensable financial lifeline. It helps make ends meet. For a significant percentage of the current labor force, the statement will also hold true once they retire. But when examined as a whole, Social Security can be a complex, confusing, and potentially intimidating program for the American Republic. To try to understand, I can change that. Today, we're going to break down three complex topics that will be explained in plain English. How America's top retirement program got itself into financial trouble. So apparently, America's financial retirement plan is in trouble. Okay, the Social Security changes Democrats and Republicans want to make to strengthen the program. Why a resolution to Social Security's problem is ways off. Okay, it's facing a $20.4 trillion cash shortfall. So they got not enough money. That's the problem. Okay. Since 1940, Social Security has been providing eligible workers with a monthly retirement benefit. For the vast majority of those years, this program has brought in more revenue than it's paid out in benefits. Where does Social Security get its revenue? You ask. Approximately 90% of the money brings in comes from the 12.4% payroll tax on wages and salaries. Okay, most of Social Security money comes from the 12.4% payroll on tax on wages. This payroll tax is paid on earned income between 0.001 and 147,000 in 2022, although the upper limit will rise to 160 to 100 next year. The remaining 10% of annual revenue comes from a combination of tax and social security benefits for recipients who earn above cell income thresholds and interest earned on bonds held by Social Security Trust. Okay, the problem is this money goes to a lot more than they expected. So here it is. The problems for Social Security is that numerous demographic shifts are increasing payouts at a much faster pace than revenue growth. As a result, Social Security ran a deficit in 2021 already. So last year, this deficit is expected for to growth in size every year moving forward. This deficit is expected to grow even faster. Okay. These demographic shifts include the ongoing retirement of baby boomers, a slowdown in legal net immigration to the U.S., historically low birth rates, lower interest rates, and growing income inequality. And how they want to strengthen it. Okay, how Democrats and Republicans want to strengthen Social Security. Now that you have a better understanding of why Social Security is in big financial trouble, let's take a look at how lawmakers propose fixing the program. And okay, so it's a bit complicated, so I wouldn't go over this paragraph. But certainly, this fix hasn't happened yet. Okay. Hmm. Anyway, the key point is there's certainly a problem with the Social Security money. They're having deficit already last year, and this deficit will grow again this year and a year after that. And they both Democrats and Republicans have solutions, but its solutions have shortcomings. So we'll see how it goes. Okay. Yeah. So now let's go over to marketbeat.com. Hmm. Twitter uses Toast to this early Black Friday wine delivery deal. Kyiv prepares for a winter with no heat, water, or power. Okay. It's important to get to know what's up with Ukraine and Russia as well, because this geopolitical tension can also affect stock market status. So Twitter users can blue check for 7.99 monthly cash pool or disability Elon Musk Twitter at a crossroads. Qatar's vast wealth helps is host the FIFA World Cup. Okay. Mm. Okay, I just picked a few articles. Let's read it one by one. Kyiv prepares for a winter with no heat, water, or power. The mayor of Kyiv, Ukraine's capital, is warning residents that they must prepare for the worst this winter if Russia keeps threatening the country's energy infrastructure. And that means having no electricity, water, or heat in the freezing cold cannot be ruled out. We're doing everything to avoid this, but let's be frank, our enemies are doing everything for the city to be without heat, without electricity, without water supply in general, so we all die. And the future of the country and the future of each of us depends on how prepared we are for different situations. Okay. Russia has focused on striking Ukraine's energy infrastructure over the last month, causing power shortages and rolling outages across the country. Kyiv was scheduled to have hourly rotating blackouts Sunday in parts of the city and the surrounding region. Rolling blackouts also were planned in nearby. Hive plans to deploy about 1,000 heating points, but noted that this may not be enough for a city of 3 million people. So, uh, there's the conflict between Russia and Ukraine has never stopped. Russia is doing what they can do to have harm on infrastructure of Ukraine, so that Ukrainian people would have no heat, no water supply, and at the end, what they want is uh, Ukraine to die in pain. Uh, so unfortunately, Russia Ukraine president has warned that its resident could possibly have this pain. Twitter users can soon get blue check for 7.99 million monthly fee. Twitter has announced the subscription service for 7.99 million a month that include a blue check now, given only to verified accounts as new owner Elon Musk works to overhaul the platform's verification system just ahead of U.S. midterm elections. Um, what the thing that I have to look at is U.S. election. U.S. election, how it affects stock market, and what they do before election and what they do after election is what I have to pay attention to. Hmm. In an update to Apple iOS device available in the US, Canada, Australia, New Zealand, and the UK, Twitter said users who sign up now for the new Twitter Blue with verification can receive the blue check next to their names, just like celebrities, companies, and politicians already follow. But Twitter employees Esther Crawford tweeted Saturday that the new Blue isn't live yet. The sprint to our launch continues, but some folks may see us making updates because we're testing and pushing changes in real time. Verified accounts did not appear to be losing their checks so far. It was not immediately clear when the subscription would go live. Crawford told the Associated Press in a Twitter message that it is coming soon, but it hasn't launched yet. Twitter did not immediately respond to a message seeking comment. Anyone being able to get the blue check could lead to confusion and the rise of disinformation ahead of Tuesday's elections. So, what's the bottom line here? Hmm. Cesspool or civility? Elon Musk, Twitter at crossroads. The discourse was never all that civil on Twitter. The loudest voices have often drowned out softer, more nuanced takes. After all, it's much easier to rage twit at a perceived enemy than to seek common ground. Whether the argument is about transgender kids or baseball. In the chaos that has enveloped Twitter, the platform, and Twitter, the company, since Elon Musk took over, it has become clear that it isn't changing anytime soon. In fact, it's likely to get much worse before it gets better. If it gets better at all, Musk, with his band of tech industry loyalties, arrived at Twitter just over a week ago, ready to tear down the Bluebird's nest and rebuild in its vision with breakneck speed. He quickly fired top executives, and the board of directors installed himself as the company's sole director and declared himself chief twit. Then Twitter company highlight operator on his bio. On Friday, he began mass layoffs at a San Francisco-based company, letting go about half of its workers via email to return the to staffing levels not seen in 2014. So ever since Musk took a role um, in what is it, Twitter, uh, there's been a lot of change. He fired executive board members, and he even cut his working staff. And here it says to returning to staffing levels not seen since 2014. So the big change is expected to come. Mm. All the while, he's continued to tweet a mix of cruel mimish, half jokes, SpaceX rocket launches, maybe not plans for Twitter that he seems to be workshopping on his site in real time. And he's pretty negative, this author. He says, since Elon Musk took over, it has become clear that it isn't changing anytime soon. In fact, it's likely to get much worse, before it gets better. Mm. Even Warren Buffett, Berkshire Hathaway, even loses some money in this macro headwind condition. Warren Buffett's company again reported a loss this time, only $2.7 billion. $2.7 billion loss because of a drop in the paper value of its investment portfolio in the third quarter. But most of its operating business performed well, with notable exception of its Geico. Berkshire Hathaway reported a quarterly loss Saturday, $2.7 billion or $1,832 per Class A share. That's down from a $10.3 billion profit, or a year ago when the stock market was soaring. In the second quarter of this year, Berkshire reported a $44 billion loss. Okay, for last, let's go to Yahoo Finance. Read a couple of articles and get it done with this YouTube live tonight. CEOs ignore climate change amounts malpractice environmentalist Fred crushes. UN urges Musk to safeguard human rights at Twitter. PC demand is trembling, Morgan Stanley says. Hmm. CEOs ignoring climate change amounts to malpractice, environmentalist Fred Krupp says. I would say, in any sector, if a CEO isn't thinking about this, it's malpractice. The transition to clean energy. Okay, the transition to clean energy is going to make the whole explosion of the internet looks like a key lemonade stand. There are going to be huge profit-making opportunities. There are some vulnerabilities as well. I mean, I think the CEOs that don't get it are going to be case studies in business schools, not in a good way. But those that do get it are going to be able to reap huge profit. So clean energy is a huge transformation that's currently ongoing. So those who get it will reap huge benefits, but those don't get it will be like a case studies, not in a good way. But while the impacts of climate becomes more visible, be it in the form of wildfire, water, scary, and hurricanes, the backdrop for CEOs looking to adapt to these risks hasn't gotten any easier. Hmm. On one hand, the corporate leaders are facing increased recession risk and energy concerns in the near term, particularly in Europe, and on the other, the opposite, the green initiatives has become more vocal. UN urges Moscow to safeguard human rights at Twitter. Okay, let's look at this. I think this article mm, exists because there's a lot saying going on with his attitude and his action because he has just fired executive board members and a lot of employees. Um, the UN High Commissioner for Human Rights, Volker Tug, on Saturday issued an open letter to Elon Musk, the new owner of Twitter Inc., urging him to ensure human rights are central to the management of Twitter. Twitter Inc. laid off half its workforce. Wow. Laid off half of its workforce, which is really crazy. And tweets by staff of the social media company said the team responsible for human rights was among those affected. A development at which the chart described as not an encouraging start. Twitter is a part of global revolution that has transformed how we communicate. Thursday in a letter, but I write with concern and apprehension about our digital public square and Twitter's role in it. Okay. Like all companies, Twitter needs to understand the harms associated with its platform and take steps to address them. He added, respect for our shared human rights should set the guardrails for the platform's use and evolution. In short, I urge you to ensure human rights are central to the management of Twitter under your leadership. So, so since Elon Musk cut half of its workforce, even U.S. Employee is concerned that human rights could possibly be affected with his action. So probably that's why he has sent an open letter to Elon Musk. There's another. Let's see. Elon Musk is a visionary. Okay, why does he think that he's a visionary? A week after Elon Musk completed his acquisition of social media giant Twitter, Tesla and SpaceX CEO came under fire after he reportedly started laying off nearly half of Twitter's 7,500 employees, mostly detractors who worry the platform may become overrun with bigots and bad faith actors. Criticized the CEO well before he acquired the platform. The magnet has drawn controversy for various actions ranging from its polarizing tweets to reopening a Tesla factory in violation of public health mandates. So crop so a lot of people are criticizing Musk, what Musk do. But there's a guy named the Crub. He garnered praise. Um, Musk garnered praise from a thread Crop, the environmental defensive guy. Let's see what he says. He's a visionary. Krupp asserted a recent episode Influencers Way How Finance Editor. I think it's impossible not to give them credit for demonstrating the fact that electric vehicles can be extremely desirable gain, forgetting about the environmental or climate benefits. Okay, let's read last two articles. The one with Carvana, because I'm into Carvana. Okay. Let's see. Carvana shares plunged to the lowest in more than 5 years after Morgan Stanley analysts pulled its rating on the auto retailer and said its stock could be worth as little as $1. The editorial rating used core market and volatile interest rate and funding environment add a material risk to the outlook. Morgan Stanley's Adam Jonas said in a note Friday after Carvana reported quarterly results that missed estimates. He pulled his $68 price target and said his new base case is that the company may be worth the $1 to $40 share. Carvana declined 39% to $8.76 in New York trading. Let's see how long-term trading strategy pays off. Okay, I'm just gonna keep it, and I'm not going to sell. So the online used car retailer fell almost 39% in one session on Wall Street after disastrous quarterly results. Online car dealer Carvana just shadow of itself. Get gone is a dream of a future where buying a vehicle online would become the principal, if not only an option. All that remains is a great gray board with numbers that tell the story of how the dream turned into a nightmare. The last number is scary. Carvana shares tumbled 39% to $8.76 during the November 4th session on Wall Street. Last session of the week, this daily drop translates into approximately $992 million of lost market value. The company only has a market value of $1.56 billion. A $1 stock. Okay. Extremely optimistic. We'll see. Okay, this is it for today. I'll be seeing you guys tomorrow. Okay, bye bye.